Student, welcome back to my accountancy class of HS second year. Well, today we are going to learn another new thing, that is how to record in cash book. So in this question we will know how to record in the cash book. So let's see the question. Johnson Limited Company issued 7,000 equity shares of ₹10 each payable as under. On application ₹3 per share. On allotment ₹3 per share. On first and final call ₹4 per share. Subscriptions were received for 11,000 shares. The excess money was refunded and the allotment money was received in full. In due course, the first and final call was made and the call money was duly received. Show the entries in the journal and in the cash book recording the above transaction. So, in this question, Johnson Limited Company issued 7,000 equity shares. So, the company has offered the public to 7,000 equity shares. And the class of our shares is equity of ₹10 each, that is shares are issued at par, payable as under. On application ₹3, on allotment ₹3 per share, on first and final call ₹4 per share. Subscriptions were received for 11,000 shares. Now what does it mean? That public has subscribed more shares than actually offered by the public, and this is a case of what? Oversubscription, when public applied for more numbers of shares than actually offered to them by the company, then it is a case of what? Oversubscription. Well, the excess money was refunded and the allotment money was received in full. So what did the company has done? The company has rejected and refunded the excess application money, and then the company made allotment and the whole allotment money was received. Now what is the excess application money? That is 4,000. Our 11,000 minus 7,000. 4,000 numbers of shares were refunded and rejected by the company. In due course, the first and final call was made and the call money was duly received. So, in due course, what happened? The first and final call was made and then the money was received by the company in full. Show the entries in the journal and in the cash book recording the above transaction. So, in this question, we are required to prepare journal and cash book, and we are required to record the above transactions in the cash book. Now student, remember one thing, when both cash book and journals are required to be maintained, then all the transactions relating to, or all the entries of receipts and payment of cash are recorded in the cash book, and entries related to transfers of application money, allotment and making call money due are recorded in the journal. So remember this thing. Receipts and payment of cash are recorded in the cash book, and transfers of application money, allotment and making call money due all are recorded in journal, and receipts and payments of cash are recorded in cash book. Okay, now we are going to solve this sum. This is the format of our journal. So you know well the format of the journal. First column, we are required to write in the first column date, and then particulars, then debit, ledger folio, and then debit, and then credit. Now, first entry is for receipts of application money. So, what is the journal entry? Bank account debit to equity share application account. This entry we will not write in the journal. This entry will be in the cash book. We will record this entry in the cash book. As I said you earlier that all the cash received and cash payment are to be recorded in the cash book. So this entry we will write in the cash book. The second entry is of transfer the return back the excess application money. Refunded, rejected. The company has refunded and rejected the excess application money, and this will be refunded back to the shareholders. Now this entry will be shares, equity shares application account to bank account. Now we also not write this entry. This entry we will write in the journal. We will record this entry in the cash book. In the cash book. So the next entry is of transfer the application money to the share capital account. Now this entry, this transfer of application money to the share capital account, we will write this entry in the journal. So equity share application account debit to equity share capital account. Now the company has offered the public for 7,000 shares and the public has subscribed for 11,000 shares. So the excess 4,000 shares is rejected and refunded by the company. Remaining 7,000 shares, numbers of shares are to be transferred to the share capital account. So the numbers of shares here is 7,000 and the rate of application is rupees 3. That is 21,000. Okay, equity share application account debit to equity share capital account. The application money so received is transferred to the share capital account. Now we will write narration. Being the application money on 7,000 shares at the rate of rupees 3 per share transferred to the share capital account. Okay. Now our next entry is making allotment money due. So the due entry of allotment. So this entry is equity share allotment account debit to equity share capital account. Equity share allotment account debit to equity share capital account. Now see, what is the numbers of shares? 7,000 and the rate of allotment in our question is rupees 3. So here also 21,000. Now see the entry equity share allotment to equity share capital. That is the company is making to the shareholders to give the allotment money. It is the due entry for allotment. Now we will write the narration. Being the equity share allotment money due. It is a due entry due on 7,000 shares at the rate of rupees 3 per share as per board's resolution number dated ... So this is our second entry. Now student, the next journal entry is the receipt of allotment money. So we will not write this receipt entry. We will write this receipt entry in the cash book. So our next entry is making first call money due. So equity share first and final call account debit to equity share capital account. Now what is the numbers of shares? 7,000, and the rate of first and final call is 4, that is 28,000. So see the entry, equity share first and final call account debit to equity share capital account. This is the due entry for first and final call. Now we'll write the narration. Being first and final call money due on 7,000 shares at the rate of rupees 4 per share as per board's resolution number ... So this is the due entry for first and final call. Now student, you have seen that all the entries relating to cash receipt and cash payment I have not recorded in the journal. So all these entries relating to cash payment and cash receipts, I will write all these entries in the cash book, as in our question it is said that we will maintain both journal and cash book. So the entries relating to cash receipt and cash payment, all these entries I will record in the cash book. Student, this is the format of the cash book. So you have done earlier in your class 11 a chapter cash book. So in that chapter you have learned how to record cash book. So in cash book there is two sides, debit side and the credit side. That is, our left hand side is the debit side and our right hand side is the credit side. At the above you are required to write cash book as you are preparing cash book, and then you will write the first column is the date column, then particulars column, then ledger folio, then amount. And in that side also you write first date column, then particulars, then ledger folio, and then amount column. So what I have said, that all the cash receipts are recorded in the debit side and all the cash payments are recorded in the credit side. So our first journal was that to receive the application money. So what was the journal? Bank account debit or cash account debit to equity share application account. So this entry will record here in the cash book. Okay. So write the entry to equity share application account. Now see, 11,000 was the numbers of shares that the public has subscribed for, and the rate was 3, that is 11,000 multiplied by 3 is 33,000. Below the entry, you are required to write narration. It is not necessary to write narration, but it is good if you write narration. So, write a brief narration. Being application money received on 11,000 shares at the rate of rupees 3 per share. Now, what did the company has done? The company has rejected the access and application money, rejected and refunded back the access and application money. So, cash goes out. So, we'll record this one in the credit side. That's because the company refunded the access application money. So, in this side, you will start by writing by equity share application account. So, what was the numbers of shares that were rejected and refunded? 4,000. 4,000 multiplied by 3, that is 12,000. So, below here write being access application money refunded on 4,000 shares at the rate of rupees 3 per share. Okay, student. Now, the allotment entry we have recorded in the journal. Now we will write only the receipt of allotment money in the cash book. Clear? To equity share allotment account. So, what was the numbers of shares? 7,000 multiplied by rate is 3, that is 21,000. Okay. Now we will write a narration. Being allotment money received on 7,000 shares at the rate of rupees 3 per share. Okay. Now, the next journal entry is making first call money due. So, that entry we have recorded in the journal. Here in the cash book, we will write the receipt of application money. Okay. Write this one. To equity share first and final call account. So, what was the numbers of shares? 7,000 multiplied, the rate is 4. 7,000 multiplied by 4 is 28,000. Right? Narration. Being first and final call money due on 7,000 shares received on, not due, received on 7,000 shares at the rate of rupees 4 per share. Okay. Now, what we are going to do? We will calculate both this side. So, first of all, we will calculate the higher side. In this side, the total is 12,000, and in this side, the total is 33,000 plus 21,000 plus 28,000. That is 82,000. 82,000. In both sides, we will write what? 82,000. This is balancing an account. Now, our lesser side is this one. So from 82,000 we will deduct this 12,000, and here we will write by balance CD, that is carried down. Here we will write balancing figure. So 82,000 minus 12,000, that is 70,000. Now this 70,000 we will, in this side we will brought down this one to balance, brought down 70,000. Okay student, so what we have seen in cash book, that all the cash received and cash payments are recorded in cash book and nothing more than that. Okay.